In this video, I'll be breaking down how much you need to make in order to afford a 2022 Rivian R1T. There are 4 options I'll be covering today, and you can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation, and some are willing to sacrifice quite a lot more in order to get the car that they really want. Stick around to the end of the video to find out which method would be best for your situation. This is 4-Wheel Finance, a channel dedicated to helping you making smart financial decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make, so please click the like and subscribe button, comment down below what other vehicles you would like to see. The first rule is the 24-10 rule, and this states that you must put at least 20% down on the vehicle, you can't finance it for more than 4 years or 48 months, and the payment cannot be more than 10% of your monthly gross income. Since the 2022 Rivian R1T has an MSRP of $67,500, if you're lucky enough to get it close to MSRP, you would need to put down $13,500, and with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $1,215.89. Take note here that you're also paying about $4,300 in interest, and so that definitely adds up over a 4-year term. Bank rate states that the average monthly insurance cost is $148, but this varies quite a lot, so use the Smart Financial link in the description down below to find out exactly how much it would cost you to insure a 2022 Rivian R1T. This would bring your monthly total to $1,363, and back to that 24-10 rule, given this would be $1,360, you would need a monthly gross income of 10 times more, bringing that to $13,638.90. which would equate to about $163,666.80 annually. I encourage you here to take a look at the opportunity cost. If you were to buy a cheaper $10,000, $15,000 car in cash and put what would be your car payment of $1,215.89 in the market instead, over the course of 5 years with a conservative 6% rate of return, that would turn into $84,898.32, gaining over $10,000 in interest alone. And this is just for the first 5 years. If you were to continue that for 10 years or even further, it would amount to about $198,000, $511.42, again, only at that 6% rate of return. And for reference here, the stock market averages around 10% return per year, so the 6% is relatively conservative. The next rule here is the Dave Ramsey rule, and this states that you must have a 3 to 6 month emergency fund built up. The vehicle can't be more than 50% of your annual gross income, and you must purchase it in cash. Given that the 2022 Rivian R1T starts at that $67,500, your annual gross income would need to be a minimum of $135,000. Ideally, it's nice to purchase in cash, as you would have to avoid paying interest, and in this case, it's about that $4,300, and your insurance would be a little bit lower. But obviously, not too many people have $70,000 in cash that they can just put towards a vehicle. Those first 2 rules are a little tricky to achieve, and I'd say the majority of people wouldn't be able to follow them, which is why I've come up with my own rule. For my rule, I think you need to have at least a 6-month emergency fund, give yourself a little bit of backing there, take some pressure off yourself, invest 15% of your gross income into your 401k, and then max out your Roth IRA and ideally your HSA as well. And yeah, I know this might seem like quite a lot of saving, but I don't give you any sort of monthly percentage rule that you have to stick to. So once you make these investments, once you have your emergency fund built up, it's really kind of up to you to decide if you want to put a lot more of your free spending money into a car, or if you'd rather go out to eat more, go on vacations, travel, that sort of thing. And again, that 6-month emergency fund there, it just covers you in case, obviously, an emergency happens. It takes a little bit of stress off of, having that car payment. You always know you'll have that backup there. And the investment portion will just give you a little bit of security later in life when you're most likely going to need it the most. If you're lucky enough to start early, then that can compound to quite a large number at the end of 30, 40 years. And a lot of people say nothing's guaranteed, you should live your life how you want to now. And while it's true that nothing's guaranteed, it's really difficult to put a value on having a peace of mind for yourself or your family's future. So that investing don't overlook that. That's a really important step. And the final rule here is the 1/10 rule, which was developed by Financial Samurai. This is a blog, super popular, so you may have heard of it before. Personally, I think this is one that's the majority of people should follow if they're really trying to build their wealth and increase their net worth rapidly in a short amount of time. It really doesn't allow you to buy a new vehicle, But it does allow you to spend responsibly, and this reduces your car ownership stress and your overall financial stress, and it increases your net worth over time because you're putting a lot more money into things that go up in value. It's pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a vehicle. It could be new or old, but obviously for the vast majority of people, it would be used, because in this case, you'd have to make almost $700,000 a year to afford this Rivian. You must own it for at least 5 years, ideally more. And the theory behind this, again, is to minimize a lot of the stress associated with finances. It frees up a lot of money that you can put into things that go up in value, assets or opportunities, anything that may come your way. It's a lot more stressful making difficult life decisions when you're worried about payments each month. It's a lot harder to decide if you want to switch jobs, or if you want to move, or if you want to have another child or something like that. So being able to have a little bit of spending money, have a little bit of an emergency fund and whatnot, really takes a lot of stress off your plate. Once again, this is 4Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them in the description down below. And give a look at that Smart Financial link as well. They shop around to find the best insurance rate for you